Hello everyone, welcome to the beginner's room here at XM Live. This hour is about the COT report, which is an integral part of my trading strategy. So I will give you a little bit an introduction in the first couple of minutes about what the COT report is, and then we look how I implement this knowledge of this report into my trading strategy. I will show everything very transparent, how I open positions, how I manage the risks. And with no further ado, let's start. By the way, I would also welcome the viewers on YouTube. If you have any questions, please put them in the chat. So you have the YouTube chat, you have the chat of XM Live. By the way, the viewers from YouTube, XM Live is a service where we stream on 3 different channels, 8 hours every single day. It's absolutely free. You sign up, you log in every day, you see live trading from more than 12 experts that show their trading strategy. And the goal is that the path of becoming a successful trader will be shortened by the experience of traders who do this professionally, so you can watch them over their shoulders how they're doing it. Okay. With that said, let's start a small introduction about the COT report. By the way, I have a very good, recently I have a very good run in the markets. A lot of profits are there. And again, they are based on my knowledge on the COT report. So let's start with some fundamental knowledge about it. And then we will start to go into the report of this week. We look at the signals, and I show how I implement them really realistically into trading. So when I start to analyze the markets, I look at 3 different levels of the market. The first level is the fundamental level. Now, the fundamental level, it gives me an overview where we are in the markets, and that's true for Forex market, but also for the stock markets. How do I see things? Now, look, the fundamental picture, I try to look at it objectively. And I think also over the years, I got so much experience that I'm not bad on it, but that doesn't mean I make mistakes. And so what I'm saying here is, I tell you how I see the markets fundamentally, but it's not that I'm trading based on that. I could do the opposite thing because it's part of my analysis, but it's not part of my decision making in general. But obviously, if I'm right, and if the market shows me that I'm right, then I can be more aggressive. So it helps me to be aggressive in the market. And I think in the long run, if you want to become a successful trader, there is a lot of, you could call it science, within trading. So you're analyzing the markets and you get a statistical edge and so on. But with all the science, it's very seldom that you really can beat the markets in big scale. What you have to learn is when to be aggressive and when to be defense. And that's a lot intuition, a lot of experience is part of that. And that's why I'm saying trading is always part science and part art. And the artistic part, it's the difficult part to teach. But the fundamental picture, if I'm right there, it helps me on the artistic part of trading. So how do I see markets at the moment? Look, we had the tariffs, which created some disruption. I want to give an overview what happened since the beginning of the year, how I see it again. A new government was elected, the Trump government, and the Trump government from quite the beginning, they said the main problem that the US is facing is the fast rise of the national debt. The debt is rising too fast. We are talking here about 7% deficit to the GDP, which is really big. This is like, normally debt should rise at this level when you're in a deep recession, but the debt was rising in the US since Corona. So there was no recession, but the debt is rising now for 4 years like crazy. And the new government said this has to be stopped. So how they plan to stop it? They planned to reduce expenses, and Dodge with Elon Musk task force, they should be part of the solution here. And on the other side, they want to increase income. How was the plan to increase the income? By tariffs. Now, tariffs is quite unpopular within the economic sphere, and it's logical because it hurts like everybody. But the new government believed that this is the most least hurtful thing to do. Now, moving fast forward from January, what was their plan? We are now in May, and a new budget has to be approved by the government, and the new budget doesn't show any change. So they continue to spend like crazy, 7% increase on GDP. This is not good news. This news is very, very new. It's discussed in the last couple of days, and this worries the market. So we see interest rates in the US, long-term interest rates go up. And now here the funny thing is the stock market goes up as well. Why? Because again, money is flowing from the government is spending a lot of money. Money is flowing into the market. And that's fantastic for the stock market. So for me, how do I see the stock market? The stock market, after the introduction of tariffs, the stock market tanked. We corrected 20%. And then a lot of people, also institutions, they went flat. How do we know that they went flat? Because we see that in their reports. There is a report which is called 13F. Let me write this down. 13F. This is the report. And what do we have here? Up. Something strange is just me. I have a second screen. So on this report, we can see what hedge funds and big funds in general are doing. And we see many, many hedge funds went flat, went to cash, were afraid. But then the stock market recovered sharply. We made a V shape. What I mean with that is I will show you in the markets. If you look at the daily chart, so we see the NASDAQ went down, and look how sharply it went up. And now I believe what we are seeing here is a real problem for those hedge funds, because those hedge funds, they have to beat the market. So let's say they went flat here and the market suddenly go up. What do they have to do? They have to run after the market and they have to get in because they need to have some performance. What would you do if the stock market at the end of the year is up 20% and you're at -10? All your clients will run away. So they have now to catch up and they have to run after the markets. And this is creating a melt up, not a meltdown, a melt up into the markets. And I think that's what we are seeing at the moment. Now, again, this is my theory. I might be totally wrong, but I have some data that is supporting this theory. And again, I'm not trading. This is not my main signal. And I say, oh, only because the market is going up, I go long. No. In addition, if I want to go long, I need to see this in the COT report. And again, but this is just a fundamental outlining how I see the markets. Now, my main analysis comes from the COT report, which is the theme of this hour. The COT report is published once every week on Friday evening. I analyze it over the weekend, and then I trade by the analysis of the COT report during the week. So this is general overview. This, the COT report, tells me what I want to trade during the week and in which direction. So what you see here is I'm not trading on technical analysis. I am trading based on the COT report. The technical analysis, which is the last layer of my analysis, this is just for timing. So let's say I have a long signal in euro dollar, which I have this week. So I have a long signal in euro dollar. I know I will go only long. I'm not going short. No matter what happens this week, I will not go short in euro dollar. I might not trade it, but if I trade, I go only long. When do I go long? When I get a technical signal, then I go long. Okay? This is my trading strategy. So let's talk now about the COT report. As I already mentioned, the COT report is published by the US government. It's published every Friday evening. Everybody can see it. This is the website. You can download it as Excel. You can even, there is like an API cutting edge, so you can program with it, and you can do whatever you want with the data. The data, how does the data look when you download it? I have it here. It's not looking like this. It's looking like that. So you're downloading a huge table, and this is the newest report. So you see here all the products that are in this report, and you see tons of columns. I don't know how many there are, but there are, I think, more than maybe 30, 40 columns that you have here. Okay, so this is the report. And the question is how to read the report. So there are a couple of reports, couple of COT reports. By the way, COT stands for commitment of traders. So what the report shows, which trader is positioned how in the market. So in the old report, which is called legacy report, we have three groups. We have non-reportable, which are small speculators. We have non-commercials, which are institutionals, and we are having commercials, let's call them market makers. Okay, but and based on how they position themselves, based of what they are doing, because each group does a little bit a different thing, based on their behavior, I will position myself. So sometimes the COT report doesn't show me a clear signal. That means I will not trade it during the week. Sometimes it will show me a signal, and then I know in which direction I want to trade. In general, and by the way, we have the open interest. So let me explain also the open interest. The COT report is done on the future market. And what are futures? Futures are contracts into the future. So think about, it's like a house selling contract. So you have a buyer and you have a seller, and you agree on the price, and you agree when you deliver it. Let's say end of May, okay? End of May. But you make the contract now, but the delivery is in the future. That's why you call it a future, okay? But on every contract, you have a buyer and a seller. And so the open interests are how many contracts are open there. Is there one contract open, 1,000, 1 million, 20 million? And what it shows is like if there is more contracts open, there is more interest. This is why it's called open interest. If there is less contracts open, the open interest will go down. Non-reportables, those are small speculators. Small speculators in general let me just check here. Yes, small speculators in general, they believe they have a trading strategy. Maybe they have a trading strategy, but the majority of people, they don't follow their strategy and they lose money. In general, you can say small speculators, of course, within the group of small speculators, you have very profitable trader, but you have also a lot of, in general, they're losing.